Welcome to the June 7th edition of Markets Demystified from ESOP Advisor, LLC. I'm your host and the owner of ESOP Advisor, Jonathan Oden. This edition, frequent allocations, possible pluses of recurring investments. Get your hedge on. Though hedging strategies are often associated with short selling or the use of derivatives, hedging is technically defined as any action taken to limit losses. Even though short selling, use of derivatives, or frequent selling may not be appropriate for the average retirement investor due to the cost and time associated with those strategies, the practice of dollar cost averaging may be an accessible way to reduce the chances of entering the market at a peak before a downturn. The last market peak was in January of 2022. Since then, stocks plunged more than 27% at their lowest. Though the overall market has recovered since its October lows, anyone who bought during the peak in January of last year would still be down more than 10% on their purchase. Buying at a peak is definitely an undesirable investment action, especially when a painful and prolonged downturn follows the peak. Dollar cost averaging. Dollar cost averaging may be a simple way to reduce the chances of buying at a peak, though it can seem counterintuitive to continue purchasing stocks when they are making frequent new lows, as they did for much of 2022. Buying during market downturns can be desirable opportunities for long-term investors. For example, instead of only buying at the January 2022 peak, if an investor would have also bought again during the lows seen in the last part of the year, they would have lowered their average share price from the level of the peak. The lower average share price would provide them with a higher return once stock prices recovered. Dollar cost averaging simply means buying more frequently instead of less frequently. Time in, not timing. Trying to time the market by guessing opportune times to buy is difficult to do even for the most seasoned, knowledgeable, and experienced professionals, and it is virtually impossible to do with sustained consistency. Investing on a recurring schedule, regardless of market conditions, can reduce the element of chance and guessing involved in market timing. Making frequent purchases in smaller amounts as opposed to less frequent purchases in larger amounts may reduce the probability of buying at peak prices. Regular purchases can help smooth out an investor's average share price as compared to the fluctuating ranges of highs and lows of market gyrations. We recommend that the average retirement investor set a fixed schedule for making allocations to investment accounts. Sticking to the schedule, regardless of market conditions, may be beneficial for the long-term retirement investor. Hypothetical investors. We analyzed results from 21 hypothetical investors with various allocation schedules and compared their average share prices. Varying investment schedules of once per month, once per quarter, twice per year, and once per year were used. For schedules of less than once per month, different months were used for each hypothetical investor. All of the hypothetical investors started investing in 2019 and invested the same amount per year. Outcomes showed that a schedule of once per quarter, or 4 times per year, could have led to an average share price that was 2.2% higher than a schedule of once per month. A schedule of twice per year could have resulted in an average share price 3.5% higher than a once per month schedule. Buying just once per year could have led to an average share price of 5.2% higher than buying every month. Stick with it. While hedging strategies may limit the potential for losses, they also reduce potential gains, and it is important to note that buying less frequently can result in an average share price that is lower than a more frequent schedule. However, buying more frequently appears to reduce the chances of having a higher average share price, which is why ESOP Advisor recommends the average retirement investor, if possible, make allocations at a minimum of quarterly or every 3 months. Prices referenced are for the Standard & Poor's 500 index or the S&P 500 and do not include any dividends received. Thank you for listening to Markets Demystified from ESOP Advisor LLC, where we relate investing to personal money management. Visit us on the web at esopadvisor.com. That's AESOP advisor.com, or call us at 940-268-4161. The preceding information is not meant as individual investment, legal, or tax advice. ESOP Advisor LLC advertisements are for informational purposes only and are not recommendations to buy, sell, or hold any asset. All investments involve risk, and the past performance of a security or financial product does not guarantee future results or returns. While diversification may help spread risk, it does not assure profit or protect against loss. ESOP Advisor LLC does not provide tax or legal services.